Everyone's favorite business, Apple, just reported Q4 numbers, and we've seen mixed responses after hours as the stock is basically trading where it closed. The business beat estimates and declared a dividend of 23 cents a share. So despite being down only 20% year to date, should us value investors look to Apple as our next investment, or are the best years beyond us? We'll answer all those questions and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today, we are going to start with an analysis of the financials, the top line, bottom line, balance sheet, cash flows, etc. And finally, we'll conclude with an evaluation of this business to see whether or not us retail investors should be picking up shares of Apple. And if you enjoy this type of content, please subscribe because we post on here regularly, looking in depth to the fundamentals of different businesses. So if that interests you, subscribe, like the video, and without further ado, let's jump into it. All right, so as always, we'll start with the CEO's comments here for their Q4 results. And they start by saying that they're taking on initiatives such as protecting the environment, securing user privacy, and strengthening accessibility while creating products and services that can unlock humanity's full creative potential, and that despite the economic headwinds all businesses have faced, Apple was able to triumph. They continue to invest in their long-term growth plans, generating over $24 billion in operating cash flow. We'll get to that towards the end of the video, and that they returned $29 billion to their shareholders. So obviously some marketing material here from the CEO, but before we jump into the numbers, let's quickly look at what they've been able to do historically. We can see here they have been able to grow their revenues year over year, despite some slowdowns here and there, and ultimately that has translated to their bottom line as well. Always a great thing to see from a potential investment. If we look at their cumulative total shareholder return, Apple is up to over 1,000% versus the S&P, which is at 363% if you were to invest evenly in these two products in August of 2011. Now let's jump into the statement of operations. We'll look at this first from a quarterly perspective. They were able to produce $90 billion in revenue, which is comprised of products and service revenues. Then in order to produce those revenues, it cost them about $52 billion, so they're left with a gross margin of $38 billion. Deduct our other expenses, we're left with $24 billion, let's call it $25 billion operating income for this quarter. And then since this is the Q4 results, they give us the 12 months perspective, so we can see $394 billion for the 12 months of fiscal year 2022, gross margin of $170 billion, and finally operating income of $119 billion. But let's break that down a little further. Let's look at their net sales by reportable segment. We have Americas, Europe, Greater China, all increased year over year, as well as APAC. But then when we get to Japan here, Japan is where we've seen a slight slowdown here in terms of revenues. Ultimately, again, able to produce that $90 billion, up from $83 billion a year ago. And then we look at this by a category perspective. iPhone, Mac sales, wearables, home accessories, services all increased, but we had a slowdown in their iPad sales. But even with that slowdown, they were still, again, able to produce more revenues than last year. So ultimately, it's a positive on their end. Now, we're looking at the balance sheet here, $48 billion in cash on the $109 billion in debt. That's actually not what we want it to actually look like. We'd like to have more cash than debt on the balance sheet, but they do also have $120 billion marketable securities. This does fall into their non-current assets section. So if we add that in there, they have about let's just call it $170 billion in cash there, $352 billion in assets in total on the $300 billion in liabilities. Nothing really to ward off investors on the balance sheet, at least. Finally, we'll jump into their statement of cash flows. They were able to produce for the full year $122 billion in operating cash flow. Deduct our capex figure here of $10 billion, and we're left with about $112 billion in free cash flow for the fiscal year 2022. That's amazing by any business's standpoint. What do they do with those free cash flows to reward shareholders? Well, besides paying down some taxes, they paid out a dividend, and then their main focus here is actually buying back stock. Now, I'm not the biggest fan of share buybacks, especially when we're not doing buybacks at historical lows, but the one benefit that it does have is that they are retiring shares, so your shares become more valuable. Nevertheless, they are able to produce about $122 billion in free cash flow for the whole year. If they can do this going forward, and we add this into our calculator here, and if we require a 10% return, they do pay a dividend, and they can continue to grow at about 14% for the first 5 years. That drops down to about 8% for the 5 to 10 years after that on a 20 PE as they're currently trading at. Yeah, this stock should be worth about $4 trillion. They're currently trading at about $2.3 trillion. So even in an average scenario, that actually looks pretty good. Now, in the best case scenario, and we're going off our 5-year EPS growth numbers here, if this business grows anywhere from, let's just call it 18% for the first 5 years, this drops down to 13%. On a 25, 26 PE, this stock will be worth $6.7 trillion. Again, massive upside from here. And this again is taking taking into account that we're going to have an economic rebound at some point, and that with more consumer spending, further innovation from Apple with potentially Apple cars, metaverse innovations, etc. Yeah, it's actually possible that they can actually grow to that market cap. Now, in the very worst case scenario where we see more slowdowns like we have in Japan and in their iPad sales, let's say people aren't as interested in their iPhones, Macs, etc. If they're only able to grow at, let's just call it 5% for the next 5 years, that drops down to 2% for the 5 to 10 years after that on a 15 PE, we'd be looking at about $2 trillion for this stock. So again, even in the very worst case scenario, the stock actually looks pretty good for a margin of safety investment. And there's definitely a reason why this business has not actually dropped down all that much in comparison to the broad market. And frankly, it's actually holding up the S&P and the NASDAQ index. The only issue here is that it is a little bit expensive at a market cap of $2.3 trillion. But if you can foresee that in the future, Apple is going to be able to innovate further, they're going to be able to hold on to the market share that they do on phones, tablets, wearables, etc., then yeah, at $144 a share, we might actually be looking at a decent buy here. I'll leave that to your interpretation. Let me know what your thoughts are in the comments below. That's my analysis for this video. If you enjoyed it this far, please leave a like, subscribe, and I'll catch you on the next one.